Right. Now, next, Ethereum's 2025 resurgence from being unloved to 7,500 plus projections. Okay. Now, this 7,500 US dollars per Ethereum is not something that I put as a title to get, to get people to just look at it and say, wow, it's going to go there. This is a projection given by an international bank, right? Now, Ethereum has swiftly gone from a relatively unloved asset to a market favorite this year. Now, in a striking sign of shift, banking giant Standard Chartered recently revised its year-end 2025 price target for Ethereum, originally from 4,000 now to 7,500, citing dramatically improved fundamentals. Now, the bank's report also raised its long-term forecast, okay, whereby it forecast 25,000 by 2028. Previously, that was at 7,500. Now, such bullish forecast from institutional analysts raise a big question: what changed in the crypto and macro landscape to prompt this kind of optimism? The answer lies in a confluence of factors from institutional adoption, regulatory clarity to Ethereum's evolving tokenomics and use case that have transformed Ethereum into a favorite asset. Now, market sentiments has followed suit, with traders increasingly confident that new highs are on the horizon. Okay? Now, this is something that we need to understand overall in Ethereum. Now, to understand better, first of all, why is it getting so much, this adoption of and regulatory tailwinds? What is it all about? Now, in the past, right, not so long ago, Ethereum's outlook was clouded by lackluster sentiment and regulatory uncertainty. Today, it's the hot asset on Wall Street. So what is the cause of this reversal? Okay, because there were several developments that made it interesting to big investors a year or two ago. The first one is institutional inflow. Major investment firms are piling into Ethereum. In the US and abroad, new Ether exchange traded funds have seen explosive demand, over 12 billion of net inflows in the first 2 weeks of August 2025 alone. You also have the regulatory breakthroughs whereby, in July, we have the Genius Act that was signed into law, and basically it provides clear rules for stablecoin issuers. Now, this clarity has provided a very important backup for Ethereum, because over half of its stablecoins run on the Ethereum network. So by requiring full one-to-one backing and audits for US-pegged coins, the law kind of boosted confidence in stablecoins, and by extension, the Ethereum as the leading stablecoin platform. And not only that, we have market structure maturity, where the crypto market itself is becoming more orderly and integrated with traditional finance. So with regulatory custody solutions, institutional grade trading desks, and Wall Street firms building on Ethereum, the Wild West days are fading already. We don't have, way back, I still remember this Wild West, we actually used it in the year 2017. Where basically that time you don't even hear anything at all. It's just pure hype, right? So apart from that, we have corporation adoption, a new trend whereby the institution, the companies corporations are buying and holding Ethereum as treasury assets, much like what they did to Bitcoin. Okay, the most prominent example is BitMine Immersions Technologies, which has amassed over 1 million Ethereum in its reserve. And BitMine's goal is to acquire up to 5% of all Ethereum in existence as well. And not only that, it's slowly doing what Bitcoin is all about, that is being scarce, right? So how does Ethereum do it? Ethereum reduces its inflation rate with the 2022 merge upgrade. Basically transition from the network from proof of work to proof of stake, or short form POS. Now, under the old system, which is the proof of work, miners receive about 13,000 Ethereum per day in block rewards, causing a steady stream of new coins. And that translates to a 4% annual supply growth. Okay, so inflation is 4%. Now, after the merge, right, in 2022, validators basically replace miners and Ethereum's issuance dropped by 90%. Today, only 1,700 Ethereums are issued per day as staking rewards, and inflation rate well under 1% per year compared to that 4%. And this is the game changer for Ethereum tokenomics. Next, the EIP 1559 fee burn, okay, implemented in August 2021, means that a portion of every transaction fee is permanently destroyed, or we use the word in the crypto world, burn, rather than given to miners or validators. When network activity is high, the burn can outweigh new issuance, turning Ethereum net deflationary, which also means, right, supply decreases. Okay, so in fact, right, since the switch to the POS, Ethereum's supply has already started shrinking. As of mid-2025, over 300,000 Ethereum has been removed from circulation on a net basis since the merge. Now, another key factor that we have is staking. Okay, now with Ethereum's POS consensus, holders can lock up their Ethereum to secure the network and in return earn yields. So that's basically around 3 to 5%, excuse me, annual in Ethereum, right? Now, basically this, okay, 3 to 5% staking is very popular. But also it has two effects. Uh, okay, because it reduces available supply and creating a supply squeeze, and it transforms Ethereum into a yield-bearing asset. So put it another way, Ethereum's total supply peaked around 120.5 million and is slowly ticking down. This is why enthusiasts, right, we dub Ethereum as ultrasound money, as it can supply and can actually decline, as its supply can actually decline over time. Something which is impossible for Bitcoin until the very last Bitcoin is mined decades from now. Okay, so Ethereum supply can slowly trickle down. Later on, you see some of the calculations that I did. Now, in the so far, 1.71 million Ethereum has been burned, while only 1.36 million were issued in the post-merge era, resulting in a net supply reduction of 346,000 Ethereums. That equates to about 0.16 supply decrease per year at recent activity levels. Had Ethereum remained on proof of work instead of shifting to proof of stake, the supply would have increased by roughly 3% annual over that period. Okay, so now we can see it's actually coming down and down and down. So this is the mechanics of its scarcity. Next, we also look into how big holders may change volatility. Now, some companies are now holding a lot of Ethereum as part of their reserve. This copies what some firms did with Bitcoin but uses Ethereum instead. As more Ethereum sits with long-term owners such as ETFs, staking pools, and corporate treasuries, there is less freely traded supply. Okay, now that can soften sell-offs because fewer coins are in weak hands. Okay, And ETFs also add an arbitrage mechanism that helps keep prices aligned with the underlying market. Now, deeper liquidity from professional market makers and futures and options give traders better tools to hedge. All of these points to swings that become smaller over time. Now, volatility, however, will not disappear. Crypto can still react sharply to hacks, policy shocks, or global risk events. Large holders can also become forced sellers during stress. The likely path is basically gradual moderation. Now, 5 years ago, a 30% daily move was common. I have to be frank. But with the probably more and more big boys coming in, I would call it a more mature market, and more mature market, probably a 5 to 10% move, you will actually feel big already. Okay. So if this ownership, right, makes continue to evolve, Ethereum could trade more like a major asset with clear links to macro trends while still keeping more movements than traditional stocks. So I think the important question is that we've seen that 7,500 mark. What about 10,000 and beyond? Is this hype or logic? Now, analysts now place 5 figures, i.e. 10,000 into of Ethereum into mainstream discussion. Standard Chart lift its path to 12,000 in 2026, 18,000 in 2027, and 25,000 by 2028, arguing that stablecoin growth, clearer rules, and scaling upgrades could turbocharge Ethereum usage and fees. Now, Fundstrat, headed by Tom Lee, is louder for the near term, saying 10,000 to 15,000 is possible if institutional adoption and network effects keeps building. Bitmine's push to hold a large slice of supply signals corporate conviction and acts like a public bet on those numbers. All right. So now, end of the day, I think we have to be grounded. And I would say being grounded, you use market math, capitalization maths. That keeps things grounded. So we talk about 120 million ETHs in circulation, right? That so means 10,000 per coin per Ethereum is roughly $1.2 trillion. That sits near Alphabet and below Amazon. Bigger than Tesla plus JP Morgan together and in the neighborhood of Silver's total value. If you talk about 15,000 per ETH, that's about 1.8 trillion. That's larger than Saudi Aramco and approaching Meta. 25,000 per Ethereum is about $3 trillion. That's Apple territory already. So higher target stands basically on two pillars. Usage that becomes fee revenue and a growing share of Ethereum held long-term via staking ETFs and treasuries. So this is not without risk. So you have to watch the risk. Momentum can overshoot, competitors can erode market share, and macro liquidity can turn. So at the end of the day, 10,000 is possible on the current trajectory. 15,000 and beyond likely require a step change in utility and fresh institutional capital. Okay? So, whatever it is, we have to be logic and grounded. There is just no way for us to know where exactly is the top. And furthermore, you need to know if history is to be repeated, then take note that the cycle, after the halving before all cryptocurrency peaks, that's about in the month of October 2025. That's when historically all these crypto start to peak. Okay, but before they peak, they tend to push up in a ways to attract those that like to join the bandwagon, the hoo-has at the last minute, right? But who knows? But the time is here. So whatever is, but I don't think you will have that kind of corrections that you used to see, in that region of, let's say, like 80-90% corrections. That's probably may not happen, but 50, it is still very much possible, because for stocks, right, dropping 50% from the highs, this is something quite common that we see. Okay, so hopefully the explanation here, yeah, a bit clearer on Ethereum, and by default, everything that is crypto related. Okay, so that's it for today.